Welcome to TradeTheNBA.com. This is John. This report is for the 14th. Well, it was a pretty benign day. We had already seen the positive above 38%. We were expecting the bullish move to push back up, uh, bringing us, right. Well, we had this positive extreme coming from back here, which is what we expected, or at least to return back to. That's exactly what they did. So that was pretty much in line with the magenta having leading, and you had enough shorts to force covering. And it worked out just as they expected. So it's a good thing that we were prepared for it as well. From an NQ standpoint, likewise, we had the 1896 and they blew past that one, got right up to 50%. Again, same readings here with that magenta MBI leading and shorts adding into the situation. They're forced into a cover situation with the nice move of DOC orange below the red, which is what we were looking for. And you see the crossover here right about to happen with cyan, almost taking out green there, which bullish from that standpoint. Now, of course, got to get above 50% for maintaining the long setup. And it creates an easy situation here when you have that gap. You have the 50%, and then you have the lower algo level. So playing the capture between those 2 points makes that pretty simple from a daily observation. Staying below the 50% when there's weakness signs, you can look for a move back towards that algo level, and that's where you would look for key reading support at that point to justify buying the dip on it. From a TLT, yeah, treasuries. Just way outside the norm of market. It forces all money into the stocks or into alternative areas. Oil at these levels again is going to, you had this reports of the softening CPI. Well, yeah, okay. You had these couple of months where, well, it was literally 1 month. Things eased off quite a bit, but it's all returned right back. So that's just going to accelerate it for the next report. No change. But this is super bonus for the EU for whatever reason. Not that there's any activity going on in Eurozone justifying that, but the idea that the dollar is going to be weakened further by a lowering of interest rates, which the Fed says they're going to do, has been saying they're going to do for a couple of years and hasn't done. Yeah, go figure. The unintended consequence of that is, of course, commodities and gold continuing its rise. And this is expected. Even when we saw this dip, was kind of chuckling about it because it's just an easy opportunity. We knew we were moving back up to the 100% range and higher. Likewise, with your cryptos, we knew that there were other headwinds facing them. But at the end of the day, they're going to be supported because as long as you're forced into the market, those that don't want to participate in that or finding things a bit frothy, this becomes the alternative. And even just to park funds temporarily, as opposed to going to treasuries, you potentially could get a better yield with a move there. ETH still pushing towards back. It's 38% there. All pretty clean, and you got enough short interest that you could get a nice surprise pop drive on any of those at any time. When we look at it for 50K, it was pretty boring. There wasn't anything to just up. So you don't have to do anything. Cyan, the DOC red was below red here, and it's always by configuration. We know we get into a little bit of softnesses when you dip below the -13, but it's not bad at this particular stage. So, yes, positive extremes built into this setup, so we know where the returns are going to be right into there in the 54 range. Should a sell signal come, but you can see even from an intraday early on, pre-market started the rise and it pretty much just continued all the way through there. We've got a little bit of play with that back and forth, but for the most part, still pretty bullish. And, everything's moving smoothly right now. It might not seem that way, but from a market standpoint, the algos are pretty clear. So continue to follow those readings. As always, trade well. We'll talk to you later.